Yo guys, here we go. So let's have a look at these questions that you guys have fired across, and let's hope that I can actually bring some clarity to you all. So 123 comments. I know some of you have actually posted a couple of times in the comments itself, so I'm just gonna populate it so that I can go straight in from the beginning. Here we go. Exactly. Explain what a stop hunt rise or a drop looks like in detail, repeated in the video. So Awatas explained that perfectly right there. All right, so mad props to Awatas. Looking at the replies. Can you get Brinksbox for TradingView? I don't know if you can. I think they are present on TradingView. Okay, but, well, no, TradingView doesn't have it as an indicator, but you know it's happening in London before. That is very true, Awatas. Okay, yeah, watch the previous streams because I do mention these Brinksboxes, okay? But the Brinksbox itself is designed to help you understand the move between... So here's an example, all right? Let's consider an ideal scenario. Here we go. Look at this Brinksbox right here. The Brinksbox itself is designed for the market maker to effectively... It's the moment before the market opens, right? When it goes into full swing. Because remember, when the Asian session is closed, there's this dead gap time right here, just before the London and, well, the European Open. So the guys in Asia inform the guys in Europe and let them know about where the liquidity is trapped, okay? And then it's up to London and Europe to determine what they do with that liquidity. So, for example, if Asia are building longs, okay, or they're closing shorts and they're committing people to the downside, all right, by trapping down the shorts, all right, then London are going to do one thing. They're going to try and get the liquidity from the shorts and, hit their stops and send price higher. Whilst they're doing that, they're building their shorts at the same time by using the shorts liquidity that is being closed on the way up, okay? Then when it comes to this sort of zone right here, the US come into the play. And then the UK say to the US, yo, what's good? We've managed to trap a load of longs whilst taking out the liquidity of the shorts from the downside trapped by the Asian market. So the US has one or two options. It either continues building higher shorts, which is where you see this stop hunt rise, and then start offloading them, all right? Or they contain the zone and they build their positions above the key notable area. They follow pretty much what the UK do, and then the Asian session will effectively trigger those shorts. So look at here. Prices hold, it's held, it's held, it's held, and then before you know it, Asia makes a rise, another attempt, stop hunt rise, collapse. So it completes the orders for the market makers here and the UK guys, and then they bring it back down into the fray and recover previous zones on the left side of the chart. So that's an example of it. The Brinksbox is effectively letting you know what the market makers of the starting session is going to do. He's going to pretty much reveal his hand. See, this is where it gets confusing. Do not use the Brinksbox, okay, as a means to determine the... you can trade the Brinksbox itself, all right? Because if you were to trade this vector candle, all right, and enter on this candle here, you would know that as price makes the rise, you will be anticipating a stop hunt rise because that's what they do in the Brinksbox. They trigger the stop hunt rise or the stop hunt low. So witness, stop hunt rise, drop, recovery of the red candle, stop hunt rise, doesn't take out the previous high, M formation, collapse. All right, let's go over here. Look at this one. Stop hunt rise, drop, regulate, and up it goes. Very small Brinksbox zone there. All right, here you go. Stop hunt low, support at the 50, bounce away. All right, same again. Stop hunt low, Brinksbox, shift out the zone. Here's another one. Stop hunt low, rise, hit the New York high, reversal. Okay, another one. Here's this one. This is a little bit tricky because it was coming away from the highs. It came back down, made one last attempt, spiked the high, came back, New York session, hit the low, and then stop hunt low, then reversal. Pay attention to the Brinksbox during the open of, or prior to the open of each of the London session and the US session, and it will start to make sense for you. I hate talking in hindsight. It's easy for me to say stop hunt rise and then drop. You need to see it in real time. All right, which is where the streams come into play, because you'll be able to then go back and say, right, listen, I can see that the Brinks box, the fundamentals of a Brinks box are, you're going to be seeing a stop hunt rise or a stop hunt low. So it's the false move before the session goes into play. Yeah? Cool. Next one. You mentioned building position and range. The first one I think I understand in the context of the last video. Second. It's a bit confusing as the way you spoke seems to be the opposite of building the position. In the example of video, I'm assuming that building their position is that while consolidating around 35, 6, 8, 5. Market makers are buying many small amounts to build their position without moving the market up. The range is unclear. Does it mean also moving up and dollar cost averaging up or something different? Sorry if this question is silly. It's not a silly question, bro. I've been better. Okay, cool. So you mentioned building. Where's the ADR? The range is unclear. So the range is set by the ADR, average daily range. Price can move between the ADR low and ADR high. Yep. Awataz, you're right, man. You're helping me out, dude. Thank you so much. Pretty much answers that question. Bit confusing, I'll be straight with you, but that's only because you might just need a little bit more clarification on something. I'll go into that in the stream. Okay, then. Can you please explain how you build small accounts without risking too much? At the moment, I seem to be making money on my projection, then lose it when I exit early, like your trade on dollar yen. You turn 15 to 600. How would you do that to keep the risk down? Okay, simple. When you're trading with a small amount of money, okay, you use the minimum exposure that you know you can use on the account. So, for example, in Forex, all right, I can open an account and I can open a trade which, if it's on a 500 to 1 leverage, all right, and I open a 0.01 lot size, that's the smallest lot size on the chart, okay? However, when you don't have leverage, that is a very high lot size, okay? It's the highest, it's the minimum for the highest set, if you understand. So, right, with this account here, I've opened 3 positions. So I've got 34 lots, 0.34 lots, okay? And my margin for that is about 2 grand, okay? So I've had to put up a lot of money. But if I had 500 to 1 lot sizes, leverage, okay? These positions, I would only be putting down, what, 70, 80 pounds? Yeah? But my increments of price, the way price increases and decreases, my exposure, all right, will be relatively high because my 70 pounds is actually replicated by 500. Okay, so I'm actually putting down 35, I'm representing 35,000 pounds worth of contract sizes. Yeah, not buying power, just contract size. Yeah, big difference. So when you're trying to build a small account, all right, there's a video in my channel which helps you understand that, how to grow a small Forex account. You have to make it so that your exposure on every single trade is minimal. It doesn't do anything to the account. It's literally, you can just put on a trade and go to bed and not worry. And your max drawdown, for you to lose 100% of your account, price would have to completely collapse and drop to the downside. And even then, you're on $50 or £50 and you went in at 0.01 lots, it would have to move 1,000 pips. In Forex, it would have to lose 1,000 pips for you to lose, not even lose, it will be like 80% of your balance will be gone. All right. So it's going to take a lot of movement for that to happen, considering when dollar yen only moves on average 50 pips a day. All right. Same with in Bitcoin as well. The ADR pips here, each pip doesn't represent. So for example, if I have 1.5 lot sizes, all right, that means every pip to me is £15. So if it goes up by 3 pips, I've made £45. Well, if Bitcoin goes up like 36,000 pips in one session, I would be a very rich man. But that's not the true value of it. All right. In Forex, it is, but not in crypto. My best advice to you when you're trying to grow a small account, okay? Sample size. Stop trying to make money off a small amount of money. Show your ability as a trader. Can you grow a balance from 50 to 600? Okay? That 50 to 600 for me, I have been taking a couple of trades. I've managed to grow it now to about 2,720 now. Okay? So it went from 50 to 180 to 600 to now 2,720. Okay? I'm just growing the account. I love growing the account. There's no hunt for me starting with 10K. I like to get to 10K, all right? And then when you're at that milestone of 10K, you're at a momentum. You've got like a momentum behind you and you're just literally just exercising the same thing over and over again. Small lot sizes, pump, play, sample size. That's the idea. Come away from the idea of making money and focus on the execution of the trade. This 2,700 now is a representation of the amount of trades that I've taken and exposed my account to minimal drawdown, but I'm making frequent trades. Okay, managed to catch a few trades that worked out in my favor, and it's just managed to grow my account quite fast. Okay, now once I hit a certain point, I will withdraw the money, start again. That's exactly what I've done. So here's a question for you guys. Okay, you start with £10,000. Okay, how many of you would withdraw it when you've doubled it? A lot of you. How many of you would withdraw it if you made £1,000 on top of that 10 grand? Some will say no, because then you haven't got that much buying power. Wrong. You withdraw whatever you can. You're starting off with 10K, you make £80, withdraw it. Some will say the novelty of compounded interest and what have you. It's not about how much money you can keep in this motherfucking game. It's about how much you can take out. All right? I have a platform. I put my money down. I take it out. I don't want it leaving sat in there. It's not advised to leave a lot of money in exchanges. This is my float. Right now I started with 50. It's now 2,700. I'll look to withdraw maybe £1,000, pay myself. That leaves me with £1,700 to play with. Get this to 5 grand, withdraw 2.5. Get that again to 5 grand, withdraw 2.5. I've now covered my investment. I'm playing with the market maker's money. Do it again, do it again, do it again. So then after you've done that several times, okay, with 2.5 grand, you've made yourself 50 grand. Explain that. Because I'm paying myself, I'm withdrawing, I'm taking it away from the platform. Because then I won't start getting haphazard and start becoming lazy and putting on size because I've got the capital there. That's not what the capital's there for. The capital is there to give you a buffer. It's not about putting a lot of money up front into a trade because you have a lot of money. That means you're happy to lose a lot of money, not make a lot of money. Because when you open a trade, there is risk. By putting down a lot of risk and your margin is crazy, you're pretty much saying to the market, come and take my money, guys. I am loose. I haven't got a fucking idea what I'm doing. Your risk tolerance is very important as well. I have a very high risk tolerance, but I've had to learn to manage that because I know that if I don't have sample size behind me, I'm not going to be consistent in the long run. I'm just as good as betting it on roulette. I hope that helps you there, man. I hope that brings some clarity for you. Okay? You've been saying about your long position of Bitcoin, so you must have been... Okay, yeah, good. You must have had them overnight. Yeah, yesterday you closed it despite saying... What made you closing them other than the Elon? That truly leads to a question of a healthy stop loss is not being taken out each time the market makers make a move. I know it's an individual, but you talk a lot about if you do stay long overnight, some safety triggers can be set aligned with your model. On the top of your before, could you post indicators you're using, not all in the Discord psychological harm system? Okay. Getting one from your setup would be brilliant. Okay, cool. So the question here is of a healthy stop loss. Okay. The fundamental approach to this strategy is it's day trading. You start at the morning and you're closing at the end of the day. Finished. All right. If you want to hold the trade, you need to be able to say to yourself, can I go to bed and experience a market crash and my account will be fine? That's the question you need to ask yourself. All right. Because if you come to the chart as a day trader and then by the end of the day you decide to hold the trade, okay, you're not a day trader. You're a swing trader. My position right now with Bitcoin that I've got here, I'm swing trading. Where is it? Where's my trade? Here it is. I've got a swing trade. 2 trades there and 1 here. I am swing trading. I have made the acceptance. I am swing trading, so I'm holding the trade. Okay? Each night before I go to bed, I set myself a wild stop loss. So if Bitcoin stays in this range until tomorrow morning, my stop loss for this will be all the way down to the psychological low. That's where my stop is. All right? I'm happy to take the loss from down there. That's me accepting my risk. Done. Because I would have factored in that if it breaks down this point here, it's probably going to come back down and maybe test the zone right here. So it may even be below the stop loss. So I will judge that based on what price is doing at the moment that I decide to actually set a stop loss. Sometimes I won't even put a stop loss because I'm factoring in volatility. So this is how you grow the small accounts. You have enough money in your margin to allow the trade to breathe. This is volatile, guys. Bitcoin, cryptocurrency is volatile. If you think by coming to cryptocurrency that you're going to control that volatility because you decide to put a stop loss, doesn't work like that, guys. Stop losses are revealing your hand. That's why I put a stop loss in the wildest place, where the only thing that could rock my stop loss is if the markets themselves do wild spikes or there's wild news announcements, something crazy is happening. All right? Which means, granted, it was going to get stopped anyway. Okay? So when you're placing a stop loss, you should set yourself up and say, what are you planning to do with that trade? If you're going to hold the trade overnight, you make your exposure minimal. Remember, it's not about making money right now. It's about execution of the trade. That's all we care about. Okay? Next question. Thank you, Abatas, for those videos there, bro. Okay, when you ask slow trend is the true trend, is it depending on the number of green-red candles, or are we supposed to look at the EMA for direction? Okay, great. Great question. So, slow trend, true trend is this. When you see price doing this wild behavior, okay, it's a fast move, false move. Because look at the general context of what's going on. Slowly rising, and then bang, it drops. That's a fake move. Look at this. Slowly dropping, nice drops. 1, 2, 3 drops to the low, okay? When it's this fast, aggressive move, okay, that's a fast move, false move. Likewise, when it comes to the high, fast move to the upside, all right? Slow move to the side. Slow trend is the true trend, okay? What you're looking for, look at this. Slow trend, nice and slow pumps to the upside. The EMAs are pointing upwards. Everything is progressively rising, okay? When you see price making these wild spikes, like look at this. When it breaks through the moving average and the moving average is still straight or flat, or it's in the direction of the trade itself, okay? So for example, look at this. Price is dropping, and then smack, it goes back up. Well, the moving average was still pointing down at that point, okay? And look how long it took for it to come back up. Yeah, it's when you see these anomalies right here where you know that something fake is brewing. All right. Cool. Okay, he's answering questions there. Thank you so much, Avatas, man. What exactly does divergence mean and how to use this as a signal? You say this a couple of times, like you heard you say non-regards to ADI. Okay, when price is closing high. There you go, Avatas. Shit, man. If I knew Avatas was going to answer these questions, I wouldn't have done this video. If you want a tutorial on PC Shed's video, if you go in, Mike Dutch is good at talking about leverage. He can really help you with explaining leverage. Okay, but leverage is borrowing money. That's the best way I can explain it to you. When you borrow money, there is a term, there is a price, there is a commitment, there is an environment that when you start leverage trading, you know, you are subject to certain things that the normal trader wouldn't be experiencing with no leverage. Okay. Okay, that's something else. Okay, how does the Brinks box? Oh, we've established the Brinks box. Okay, so building a position, maybe even another time. Okay. Thank you, Derek. Coming weekend, I probably extend got a high textbook. Okay, cool. You're having a conversation amongst yourselves. Can you do a clip in the ADR in more details? I have difficulty in understanding when we have reached the low in Asian session. Okay, so like, okay, cool. The ADR itself. The ADR, guys, is a measure, all right, of the journey that price is likely to take based on the previous session's range. Okay. So let me bring it over to dollar yen. All right. Now, the ADR in Forex has been set and is a regulatory requirement by the exchanges, or should I say by the IMF. The IMF approached the exchanges and said, do not allow price for each of the corresponding currencies to go beyond a certain place. Why? Because you'll disrupt the economies and the markets. Okay? So make sure that it stays within a certain zone. All right? Now look at this. The ADR high 110 and the ADR low 109. All right? You can see that price has come completely away from the average daily range for that session. So by tonight, you will see dollar yen making a gap up effectively to try and recover this previous zone to bring it back into the fray. They have to bring it back into the zone because a wild move like this to the upside and to the downside, it's market maker manipulation. They can't do that, okay? Because it will disrupt the marketplace. Now, how can we understand the utility of the ADR itself? Well, the ADR itself tells you the cycles, okay? So the average daily range right now for dollar yen is 53 pips. So that means from the open here, it's likely to travel 53 pips to the upside, which you can see it's overextended by 77. And it can go 53 pips to the downside. 9 times out of 10, this is news announcements, by the way, guys. This is when news was happening, all right? 9 times out of 10, dollar yen stays within its range. Look at this. From this Asian session low to the high, that's 38 pips, nearly 40 pips. Its average daily range is 53. So when you come close towards it, refer to the candlesticks, understand the context to determine whether or not you've got the high or the low. So you can see it only came up to 40 pips there. Does that mean it's got 10 more pips to go higher? Potentially. But what has it done? It's been continuously rising for the past, what, 1, 2, 3, 4, about 6 hours. And the green vector candles are present. So then you know that at some point it's going to change. Yeah, because of notable volume appearing at the highs. Yeah? Likewise, when it goes to the downside, look at here, from this session here, all the way down to the New York session, what is it? 57 pips. Okay? 57 pips, its ADR is 53, so what do? They bring it back into the fray. 57 plus 21 pips up, they bring it back into the range. Okay? Keep it normalized. Now, when you're seeing a W formation, every cycle ADR that you see is a level. So the principle is this. When you see this W formation, we then understand that from this point here, price will come up and then it will come down, right? So an ADR is determined, a valid level is determined when the ADR for the day is taken. So from this point here to take out and finish in this zone here would effectively be 1 times ADR. So if we look from the bottom here, that's 86. Sorry, the daily open from there, sorry. That brings us to 76. So that has effectively achieved the ADR and some. Okay? So it's done more than the ADR. That is a valid break to the upside, valid level. When it comes back down again, when it consolidates, another break to the upside, if it's within the ADR, it would be another valid level. So if we look at it like this, you can say rise level 1, drop, rise level 2, drop, rise level 3, peak formation, drop. Okay? So the ADR is designed to help you see cyclical behavior or moves. So that helps you determine if the market maker is going to be moving higher or lower. Okay? Let me show you something. Oh, shoot. I need to actually do that video. Here we go. Can you see in the background of this? Oh, I can't even get rid of it. Can I hide my desktop? Can I hide them? Oh, bloody hell. How do I do it? I want to try and hide this. I've shared this before. If you can see ever so faint, if you look back, you can see there's a cycle here. Yeah? Each pump up is a cycle to the upside. It's a level. Rise level 1, rise level 2. Drop level 1, drop level 2, drop level 3. Yeah? This is the mental framework that you need to have. All right? That's how you determine the ADR. So the ADR times 3, all right? There's 1 ADR, 2 ADR, 3 ADR. You know you've completed a cycle to the downside. Look at Bitcoin. Where are we at with Bitcoin? Zoom out. M formation, drop level 1. Drop level 2. Peak formation. Are we expecting another drop, or is it over in this zone? Because we have seen that. There's been many instances when price doesn't complete the full cycle. We've had M formations gone straight into W formations and make higher ground. Yeah? Is this the same case with this pattern right here? Are we going to see another pump to the downside? Where are my vector candles? I'm not seeing vectors down here. This vector candle right here has been fully, not completely recovered, but we could see a rise up, retrace back down, and then continuation to the upside. Okay? So the ADR times 3 is 3 times the value of the moves in a day-to-day progression. Okay? I'll explain a little bit more about that tonight, guys. Sorry if I've gone beyond. I'm regurgitating the same shit again. Sorry. But I hope that brings some clarification for you. All right. Can you do a clip on it? Okay, I've done that. So that's a video that I'll be doing anyway soon. Can we have a definitive setup for high low, please? Midnight Saturday. Okay, so the psychological high and low, okay, is different if you are using MT4 in different parts of the world, okay? Some of you guys have Helsinki as your broker. Some of you have different servers. It all depends on where you're signing up from in the world. But the general consensus is it always appears on tonight, okay? It will happen tonight. I think it's about 10 p.m., maybe between 7 and 9 p.m. UK time, okay? Between 7 p.m. and 9 p.m. GMT. I think that's when it's going to start. The first high and the first low, all right? That's when these zones right here change. That's what's going to happen, all right? Let me go over another thing. Oops. Right. I usually explain typical behavior exhibit in each of the sessions. You mentioned Asian range often priced as further patterns that a player in London and New York can be exploited. Obviously, the New York reversal, but seeing if there are any other patterns within those sessions that you have noticed. Second one would be some guidance on how you would build a position similar to PC shedding within the pattern. Does that start on Tuesday once the range has been set and you ride it all the way down, hedging, build session? I'll always start on a Tuesday, that's correct. What time durations do you typically set and build your position for? Obviously, I'm thinking 48 hours, but seeing if you can shed more light on building positions in the pattern. Best way to exploit retraces. Stop homes. Mad respect from Australia. What's up? Okay, cool. All right, listen, Jay. The best way to understand the cycles themselves understanding the building the positions. We can't come into it with the mental framework of believing that we have to build our position within a certain amount of time. We have to respond to what price is doing. All right. So, for example, I'm building a position here, okay? I've got a position. I made 2 entries here, okay? I made 2 entries here, right there, and price came down, and it's come back up. I anticipated price to come lower, which is where I then entered, again, a buy here. Now, I'm waiting to see if Bitcoin does go down lower, which I don't think it will because of the notable volumes right here. My building of a position now will start when price comes out away from this zone, and the first retrace, I'll be building a position from that point on when price comes out of the psychological area right now. Okay? Don't attach a time frame to building a position, because by attaching a time frame, you'll say, oh man, I've still got time to build my position. I'm going to add more capital. All right? And because you'll have time trapped in your mind, you'll be then sitting through a drawdown and then keep regurgitating to yourself that I've still got time to be building a position. You're losing money. Get out. All right? You only make your decisions based on what the chart is showing you. Do not base it on time. Do it on what the candlestick is showing you. Because if you base it on time, you could be holding a position for a long fucking time, my man. And it will be a losing position and you're going to be losing your mind. All right? You base it on the candlesticks. If Bitcoin goes any lower than this point here, I'm closing my position, getting out, because I ain't going to sit through the drawdown. I've had my absolute low for this position. It's come back down and now it's bounced away from the daily open. Now we favor higher prices. I'm looking to take some liquidity from this point here. On the first retrace, I'll look to add again. I'm projecting that Bitcoin will go all the way to 40K. If it hits 40K, I will move my position in the sense where I will lock in the profits and I don't care what happens next. Yeah? So I hope that helps you there, bro. It's all about confirmations at the right time, but when do you actually know it's the right time? We will never know it's the right time, my friend. The material says wicks at the making of a formation, second leg of a W, the pattern cycles. But what I see is the advanced entries is way harder for a newbie to find. That's correct. The advanced entry is harder to find because what you guys need to do is you need to be staring at the charts. If you recall in the streams where I say to you, we should see now a vector candle coming. How am I knowing that there's a vector candle coming into play? Purely by understanding the behavior of the candlestick. When you see the candlestick pushing up frequently and it's looking aggressive as it's pushing upwards, I, from training my eyes, have had the experience to understand whether or not a candle should be a vector or not. Okay, and 85% of the time I'm correct. And the only reason being is because I've sat in front of the charts and watched it enough times. You guys have had the shortcut. Okay, you've got the shortcut to avoid having to sit through so much shit. You're now looking at the right thing. Then all that needs to be done is for you to just keep going over the same thing and understanding what to expect from the candlestick. If you see it on the 5-minute time frame or the 15-minute time frame, it's going up, 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 and every time it pulls down, you can see an aggressive pump to the upside. You know that there is price, should I say, the tick volume. Price is exchanging hands frequently in that zone. So you're anticipating that price is effectively going to finish higher, close stronger in the candle, and the green vector candle is going to come into play because the market makers are exchanging price, hands of price at that point, okay, to complete the candlestick. So screen time is what's going to tell you that. Confirmations themselves, this is the nature of the game, my friend. Look, if you were to base this W formation and say, right, this is a shift candle confirmation that price is going to go higher, pay to fucking play. That's the name of the game, my friends. Okay? I will guide you to the best of my ability and tell you everything that you need to know. But the decision is on you. You now have to be putting yourself in a position to apply what it is that you've understood about this strategy. Because trading is an expression of your ability to behave in the realms of uncertainty, and how well you do behave is reflected on whether you make a profit or a loss. Yeah? Hope that answers that question for you, man. I'm just going to take a quick pause. I'm just going to save this and send this video out to you guys. Okay, cool. Right. Yeah, so when it comes to confirmation, okay, you just need to understand, take the confluences. Confirmation involves confluence. This is the criteria we need for a W formation to come into play. Why? Because when the market makers are moving price lower, they're building their longs at lower prices. They trap the retail trader to go short. They then change the direction and go back to the 50 EMA to get the liquidity from the stops that the short sellers have been setting. Okay, when they've tapped that zone right there, all the guys who went short feel disheartened and say, you know what, I can't believe it. I missed out on that big opportunity. I'm going to see if the 50 EMA acts as resistance. We see 3 hits to the high, head and shoulders. Your big red vector candle confirms that. So they say, oh, great, the 50 EMA has now broken. Let's go short again. Comes back down. They come back and take a little bit more of the shorts. Okay, squeeze out all the weak players and then they continue lower. When they've squeezed out the weak players, the guys who went short here get entered again because they want to fight the market. They feel like they're going to see another move like this. Then price comes all the way back down, notable volume at the lows. It commits the retail trader to stay in his short. He's getting excited because price is coming down towards this area here. He starts offloading and he starts building more positions to the downside, and then the market maker shifts out of the zone and traps the liquidity and uses that liquidity to open his longs, because if he doesn't, he will then create an influx of short orders that he will need to fulfill, and then the market maker's longs are now going in the red. And as I say, he's not in the business to lose. He loses when he purposely tries to lose because he's building a position with anticipation to close it at a higher point. All right? These guys are designed to screw everyone over. All right? We just have to pay attention to who they're screwing and not screwing us. All right? Cool. I was attracted to... how you doing, Franco? Franco has asked a lot of questions here, guys. So MT4 demo versus live. When it comes to using the chart for long-term, MT4 connects data centers is something I can easily get into the country. VPN, I would need to connect to a server you speak. All right, that's a little bit of a complex question right there. I'm going to have to respond to you about that another time. Do you scalp only in Forex? Yes, I do. Yes, I have tried scalping crypto. What platform spread is killing profits? Right, guys, IC Markets now has reduced the spread on Bitcoin, and it's now introduced other cryptocurrency coins as well. You got XLM, you got Link, you got DOT. Now that's great news because I said this was going to happen. And what's going to happen now is a lot more exchanges are going to start listing more coins to take away from the cake that Binance and Bybit and Femex is actually making a killing from. All right. And ask yourself the question why whales are buying Bitcoin and storing it into cold storage. Why? Because they're going to come to the exchanges and manipulate the hell out of its value on the charts, on the exchanges. There's more volume on exchanges, guys. Massive volume, especially platforms that are linked to the electronic central network, which is what the banks use. Okay? So the fact that, Mike said it. How can we be going into a bear market and now they're starting to list more coins to trade on at the exchanges? Ain't no bear market, guys. I don't know what a bear market is. The only thing I can affiliate bears to is Honey and Jungle Book. That's the only bearish thing I think of. Other than that, there's nothing else to it. Okay, then. I see value in trading London, New York session, but I'm new to this and I've been experimenting everywhere, man. So I might sound silly. No, don't be silly. You're all good. So candles are different sizes there, but certain times different sessions. 1 minute. Don't dive too deeply into it, my friend. Okay? Don't make the mistake of thinking that you need to know absolutely everything before you even take a trade. You will only know your understanding of something once you've applied a commitment of cash to it. And then you come back and get yourself the feedback based off your behavior. Okay? Sometimes watching candle and making a decision does not give me time to execute the order. Anywho, you seem to have an option of executing these orders instantly with MT4. Any tips for that? Yeah, MT4 itself is flawless. The speed that I can open trades is brilliant. The speed that I can close trades is brilliant. Okay? For example, here, look at this. If I take this order here. Oh, come on. Where is it? Ah, shit. Can't even do it. Here you go. See, I can move up this. I can set a stop. This is how quick I can set a stop. I can set a stop down here. I can set a stop here. Right? I can move it above only when it's in profit. Okay? I can move there, stop there, 1, 2, set stops there, and I can close it, done. Quick time like that. Brilliant. That's what I love about MT4, instantaneous. And you're not penalized for it. There's no commission charged when you trade Bitcoin, Link, Ethereum, XRP. There's no commission charged on this exchange. You just have a little bit of a high spread, but the spread has been dropped drastically, okay, which now encourages people to trade on these platforms. I'm telling you, there's a big shift happening, guys. I'm telling you now. All right, then. So let's have a look at it again. Here we go. I'll come back to you about that, Franco, the top question. Please have my questions below, Alex. So how are the psychological highs calculated again? Why is it relevant? The psychological high and low is established when the first high and the first low is established at the start of a new trading week. The reason it's important is because the market maker sets his range based off the book of orders that he sees in the marketplace, and he builds the high and the low, and he sets that range, and he trades in and around that range. So he builds his positions within that range, and he does one of two things. When price comes up towards the high of the psychological high, he can trade away from it to the upside. If it comes to the low of the psychological low, he trades away from it. That means he's been building his longs in the middle of that range. He's building longs and building shorts. The key is to try and understand what part of those is he doing, okay? And I explain all that in the streams themselves. What are the Brinks boxes? I've explained that. When does this fail? The Brinks box doesn't necessarily fail, okay? It just doesn't give you a clear run for your money kind of thing. It will always do something in the Brinks box. It will set something up, okay? How can I know if the market makers are building long and shorts? Watch price action. Look at the red candles and the green candles. Why sometimes they recover candles and sometimes not? It's not a case of if they don't or not. It's a matter of when. How do you use leverage? You made a trade 82x. It called my attention. I'm using small amounts of money and I'm taking shots. Okay, I'm taking shots at entries. The entry played out, went in my favor. Happy days. Okay, I'm using a small amount of money, high leverage. Okay, I'm trying to build an account purely off Binance. You know, I'm new to Binance. I hate the idea of having to set a limit order or market order. I love market orders. That's what I've been doing for the past 11 years. Okay, but now I have to physically type it in to get a limit so I don't get maker taker fees. I think that is just BS. But it suits certain people. Do you build positions when you're entering exiting strategies given this method? Yes, I do build them. What are entry and exiting strategies? What are the entry and go in the channel and you'll see a video, a playlist called Live Trade Crypto. All right, and you'll see a couple of trade examples that I've taken on there with my mindset and the thought process behind it. Okay. All right, in question, how are you? Dragonix, I'm good, man. I'm good. Can we get a peer of choice back in the Discord? I'm getting onto that, my friend, and have other rooms for trade groups. Right, that's what I got. Thank you very much. Like Larry, first can we have? Thank you very much, my friend. I'm hoping that I have helped a lot of people. I'm having trouble wrapping my head why vector does need to be covered. Okay, let me explain something. Right, because I'm going to finish this questions because it's going to be in a few parts. Okay, make sure, guys, that all your questions come onto this post only. I'm going to pin this post. Okay, I'm going to pin it and I'm going to go through the questions. All right, pinning it to the profile. Make sure all your questions come here. You've got a question about the strategy that you want clarification on, come here. And then I'm going to keep doing these Q&A video sessions to help you understand, you know, the context of these questions. So yeah, in regards to that question, where is it? Ah, shit. Sorry. Okay, then. All right, and so I'm going to answer this question and I'm going to finish it there. So, the vector candles need to be recovered because you need to understand one thing. All right, when price rises, the market makers are building their shorts at higher prices. There has to be a yin and yang. There has to be an equilibrium. Something has to happen in order for something else to happen. Okay, when you buy something, you can only buy it if you are being sold to. If you're selling something, it can only be sold if someone buys it from you. Okay. Let's say there's a large red vector candle. The market makers push down price down to get longs filled at lower prices. Does the vector candle need recovered because the market makers operating at a loss at that particular trade until it's recovered? Not necessarily, because we will never know what that red vector candle is made up of completely. We know that they're building longs at lower prices, but they're also closing shorts at the same time. We don't know if they are closing shorts from a previous vector candle or from a previous time in the chart. We will never know. Okay? But all we can do is we can understand when price regulates, what are the chances of it coming back to that vector candle. So look at this. Red vector candle, red vector candle. Straight away, they bring it back up. Yeah? Look at this vector candle over here. Red vector candle, red vector candle. Look at what price is doing now. It's coming back up. So for us to solidify that they're going to come back into this zone, price needs to stay above this area here. It needs to break away from the 200 EMA, come out, retrace, continuation to tap this liquidity zone here. So that is a pool of liquidity that they could actually hit. Come out of the charts and look at the bigger picture. Where are we at? We're still in the peak formation. They recovered this green vector candle down here, and then they bounced away from it. Okay? Now, this big green vector candle right here, what are the chances of it being recovered? Well, the chances are high if the market maker wants to effectively build longer, get more longs at lower prices. And it can do that if he wants. He can bring it all the way down and then bounce straight back up. He came away from the daily open, come back down, went below it, and then confirmed above it. So they have interest to come higher. So then at some point, price will come back down to this zone. So we're going to determine whether or not this move to the upside, it could continue all the way up here, and then it could come back down here, form the first level drop, and then continuation to the upside. Okay? Is there more to that? I've heard you say you don't set a stop when trading. No, you can't. They can see your orders. To me, it seems like being able to see our orders would be the negative. I'm wondering if this should deter me from setting a stop or if there are other factors I'm not considering. Thanks. Thank you very much, Latte Larry. Let me tell you something, guys, when it comes to not setting stops. I haven't been setting stops for a long time because when I was setting stops, it was costing me money. Okay? You need to give the trade room to breathe. That's the one thing. You need to give it room to breathe. If you don't give it room to breathe, your stops are going to get hit all the time. You have to build a resilience in your mind to say at what point you are happy to close a trade. Do not let a trade burn your account. Remember, you can always start again. You can always start again. Think in abundance. Have no bias, okay, to getting rid of a trade. If it's not going in your favor within 2 hours of placing the trade, get the fuck out. No time to waste. Get out. Because the longer you stay in that trade for, okay, if you close it prior to the 2 hours completing, you've now got an opportunity to get back in at the right point, and you will understand it's the right point because you would have caught the initial retrace back up, for example. Okay. I'm going to do some more stuff on this stop loss thing. The only way you can get around not placing a stop is to trade light. Remember, if you can place a trade and go to bed and not worry about it, you've got the right leverage and the right exposure. All right. Okay, so I'm gonna put an end to this right now because I don't want this to be a long video. I want you guys to at least have the ability to watch it over and over if you need to. All right, but I'm gonna do another addition to this. Okay, so mad love to all of you. Thank you very much, and I will be seeing you guys later. All right, take care of yourselves, guys, and mad love to all of you. Thank you so much. Peace.